guys, I wanted to do a trade recap in detail on Nvidia today. I made a little over $400 today on 10 call options, and I want to give you guys some pro tips of some easy ways that you can be a little more patient and kind of plan ahead for when a stock moves in your favor or against you, whether you're trading long or short calls or puts. So let's just jump right into it. Right here we have Nvidia on the 5-minute chart. I'll zoom in here. So this is the action through Nvidia today. And where I entered this trade was on this green candle right here. And I traded it all the way up until about right here when it started to break below this previous high. How do I find this trade? I know that the market started ticking up in my favor. NQ was a short this morning, and then it kind of turned around. So what I want to do is use that in confluence with NQ, SPY, Apple, some of the other bigger tech names, even Tesla. Make sure they're all kind of working in my favor, and that way I have confluence in the market. You don't want to be buying Apple and the Nasdaq's or the SPY or whatever market it's connected to is going in the opposite direction, because you're fighting the overall big picture trend. So make sure that your markets are all in confluence with each other before you make a trade in either direction. So if I zoom out here to the 15-minute chart, this is the past 5 days or so. We've got several lines drawn in here. The red line is from a daily support line on a bigger chart. So we'll break it out here to 1 year, 1 day. This red line right here is this previous high support where we broke above that, and we came down and we retested that support area yesterday. So I'm looking for trades below the support level, which there's not much room here. You've just got another support level just below it, or long if it bounces off that area. That's kind of deciding whether I'm bullish or bearish. Is it above a support? Is it below support? How far can it go before it gets to the next support or resistance level? And that'll be my red line. My second red line is this other high that's way up here. So that'll be our support and resistance lines on our daily chart. Then we come back down to the 5-day, 15-minute chart and find some levels on a shorter time frame. As you can see here, I got a couple levels in yellow. I make them a different color, that way I know which time frame they came from. You can see the support area / resistance here, and then we broke above that pre-market, so that kind of catches my eye. But then we had the second level not far above it, and we broke it also in the pre-market. So these are two levels that I'm looking at to get trades off of, and then I want to look for a trade into that next level here where we have resistance. Now what I do is I look at everything as an if-then. If this happens, then I'll do this. So for example, you can see here where you wouldn't want to immediately get in on this bounce at this level because it fell down further. So you would look, if it holds this support, then I'll start to look for a long. If it doesn't hold this support, then I'll look for another support area or look for a short. There's no really room here to go short in between these levels. A possible short would have been here, but then again back to a major support area, just $1 below, $1.50 below or so. So not much room to make that much money. Once I get my levels drawn in there, then I can go down to the 5-minute time frame. Always, if I'm bullish, the stock needs to be above the 9 and the 20 EMA. If it's below the 9 and 20 EMA, we are not looking for a bullish trade. And if it's below the 9 and 20, we're looking for a put trade. But just because it's above or below does not mean we get in a trade. We need to look for these key levels and ways to get in. So like I said here, pre-market, we're above that level. We failed this level and held this other level, and then we reclaimed it. And once we reclaimed it, we got back above both moving averages on really good volume. So that being said, I don't want to buy this immediate candle. I want to wait for a close and then confirmation. If I buy this candle, a lot of the times the candle will come up, it looks great, and it can come right back down and close below the moving averages. You want that candle to close, so wait till the 5 minutes is up and you get another candle. This here is an indecision candle, a little bit of this consolidation, so I did not enter on this candle either. But once we got this third candle, this big green candle on this huge amount of volume, this is where I entered my trade. So my target from here is this next area. So when I go back to talking to if then, I bought in here, and my if then is if it continues, I'll hold. If it doesn't continue and stuffs back below this previous candle, then I'm out of the trade. This helps me really help with my risk management. But right here I bought 10 call options. We took off, we broke this pre-market high area, started running to this resistance. And what I do as this takes off and I've got 10 calls, as soon as I get into about 5% profit, I trim some of that. I sold probably 3 of the 10 calls as soon as I hit 5%. Why is that? It protects me because the stock can pull back a little bit and I'll still be break even or maybe even a little positive. And if the stock goes sideways, then that helps me because theta will start to deteriorate my option some, and that little bit of profit as soon as you get in the green is going to really help you out. It also takes some stress out because your position's smaller. You could let it move a little bit because it's going to take a little bit more to go red on you than if you didn't sell any. We started coming back up. I sold the remainder I sold the remaining half as we got toward this high at the pre-market. So at this point, I'm only holding 5 calls. We got this second candle, and we came up and we started to wick. And right at this top resistance, I think I sold all of them but 2. And then we got this red candle here. This is saying this is indecision. And this is where that if then comes in. And this is if this fails, I'm out of the trade. And if this goes back above this area, then I'm going to hold the trade. You can see here we did not break that level, and we got this big red candle, and we stuffed below these this area here, and then came back below this high. At the minimum, you would have needed to sell once you got trading back below this high. You would have been completely out of the trade. And scaling out allowed me to maximize my profits, because even if, as I scaled out, even if this candle came all the way back down to where I purchased it at, I would still make money, or at the worst break even. So that would be the first trade on Nvda. You have another awesome trade on Nvda that I didn't catch. I was pretty much done for the day after this, so I didn't want to do any over trading. And that level has been a key area of resistance that I showed you on this time frame and on a little bit larger time frame. And once we broke above that, then we have another run back up to the next resistance level. And how you would enter this trade here is you wouldn't buy this breakout candle, because a lot of times it will go above and fail, just like it did here. This probably cost a lot of people money, because a lot of people probably bought when this candle broke above this resistance area and then turned around and failed. You need that candle close and then wait for the next candle. So I probably would have bought on this candle here. And even if you were late to the trade, you could have bought right here after this indecision candle. And a way that to help myself with these breakouts is this previous high, I probably would have added 50 cents to it. So it's at 134.78. So add about 50 cents to that. So maybe like 135.10. I would have looked to enter that trade, which is that green line right there. This is an alert I had set in case I wanted to take another trade on Nvda. And then you would have had another really nice run back up to the next resistance level, where you would have looked to take profit or most of your profit. And then you can hold on to it above the 9 EMA, or if it breaks back below this area here where we kind of had some indecision. So if I had bought 10 calls on this run, I probably would have got out majority, 3/4, 90% of my trade, and maybe held on to one option to see what it would do. And then once we broke back above, I would have held on to that trade until we broke back below that area, and I would have been out of that trade. That is my breakdown on Nvidia today. Hopefully that helps you guys. It's super simple, just support and resistance trade. It doesn't have to be overcomplicated. I don't use MACD, RSI, any of that. I occasionally use VWAP. I definitely use volume, but I use my moving averages just to help me identify whether I want to be bullish or bearish on a trend, and can help me stay in the trend if I hold above the 9 EMA. But sometimes the stock gets too far over the 9 EMA right here where it's extended, because you can see here it's hugging the 9 EMA. But when it gets really far away, this acts like a magnet and it wants to come back. So sometimes you need to look if it gets overextended past the 9 EMA in the 20, it starts getting way up here. Definitely look to take profit because it's getting too far away from its average. But that is all I have for you guys on Nvidia, and I'll be back with some more trade breakdowns.